Hi, I'm Phil Anderson and welcome to my channel. I've been a property investor now for over 30 years and I've watched investors continue to make the same common investment mistakes. There's so many dirty tricks in the real estate industry and it's all caught up in a whole heap of sales hype. I want to cut through that sales hype and help investors avoid the common mistakes. I hope you enjoy the following content, but please remember to like and subscribe. G'day listeners and viewers across the country and welcome to another episode of Street Smart Property Investing, where I'm joined once again by Mr. Trent Durrington. How are you, Durro?
Phil, good mate, good. I'm interested to hear why you're selling everything.
Mate, everyone's asking it,
Yeah.
freaking a few people out, but that's the real honest approach that I'm taking as I'm dealing with investors. It's really common for me to get asked, well, what are you doing for yourself personally, Phil? And I've been a buy and hold guy forever and a day. I've believed in the benefits of buying really sound properties in good quality markets with good cash flow, and then letting the growth that I experience through those properties help me to be able to duplicate. One property turns into three, etc. But at the moment, I'm looking at my portfolio and I'm liquefying, mate. I am selling a lot of stock, and a lot of people do get concerned about that. They think that I'm preparing for a crash, but it's completely the opposite. I'm basically rounding up my gunpowder. I'm getting ready. As you know, there's a massive undersupply of stock, and there's 1.6 million downsizes, or 1.6 million homes being prepared to downsize over the next 1 to 5 years. They can't find the properties. They can't find that stock that they're desiring. I see a huge opportunity as an investor to move a little bit towards a development role where I produce the homes that those downsizers want to buy. From what it costs to produce them to the cost of what they're prepared to pay for those properties, there's great profit margins if you can get access to the land, which is, of course, the hardest part of it.
Yeah, well, there's on the ground, I've been seeing that for the last, I'm hearing about it at least once a week of a new scenario where the spec builders, what we call a spec builder, is that they secure the land, they build the house, and then they sell to the open market. I heard another story yesterday of that.
Mate, that used to happen when they didn't have anything else to do, right?
Well, the spec...
A lot of guys used to do that. They, in between jobs, they go, I'll build one for ourselves and we might be able to sell it and, make a bit of profit, but we keep our trades going, etc. Now they're doing it because they know that they're better off doing that rather than working for the margin that's in the build. They're now able to make their margin plus the profit.
Developer profit, yeah. Yeah, no, that's right. So it's becoming more apparent. And we can see it on RP data when we do our research, and we're seeing that the completed homes, there's definite equity or uplift to be made in speccing builds, no question.
Well, mate, you know that at the start of the year we started packaging up properties for investors who wanted to engage us for some help in southeast Queensland. You immediately started noticing that the square metre rate for land, the square metre rate for house builds, when you compared it to earlier stages in the estate, just 1 or 2 streets away in many cases, the same properties of the same size, so apples for apples, but existing homes, not ones that had to be built, they were selling for $100,000 or more, higher than what the cost of building a new home was.
That's that's probably 12 months ago when we first started to really see that. We're also seeing, which is a first, to cater for the downsizers, different designs being built to cater for RV lifestyle, whether it be, really nice sheds or garages attached to dwellings that people can park their...
Slightly higher, slightly deeper.
Really nice architecturally designed things, but on Torrance title lots, so just on 450, 600 square metre lots. We're seeing a lot more of that. And I'm seeing spec builders build that type of product.
Yeah, absolutely. Yeah. Now, there is a wide range, I think, of a half a dozen different designs that I've noticed that seem to be of the maximum appeal to downsizers, because not all downsizers are retirees. Some of them are, 50 plus years of age. They're potentially empty nesters. They've been in a big city environment. Now they're craving to get back to their roots or to discover nature.
Which is all right in their mindset these days. It's probably,
absolutely.
It's more and more, shit, they got their stuff together,
Yeah.
versus, just staying in the grind.
Absolutely.
Yeah.
And we noticed, and we've mentioned recently, that of all the postcodes that are performing best around Australia, and there are a lot of them that are big performing postcodes, but at the top of the top, the best performers of the best performers are the acreage postcodes. So it's not all about the little homes on the 450 blocks with the space for the caravan and the storage and the requirements that potentially retiree wants on a very low maintenance block. There is a scale of different properties, but targeted specifically towards those downsizers. We're seeing that in all of those designs, there's profit to be made right from day one.
There is. No, it's and you still got to have the right relationships with the right builders and secure the right land to make all that work. But we're definitely in a window. I'm not sure how long that window is going to be there, where you can effectively be developing a house and land package and receiving a developer profit. Previous to this, we used to be able to build some duplexes, maybe triplexes, and try and manufacture equity that way. But right now, at this point of time, we can build equity just by building
a home.
Yeah.
It's a real first for me. I've been doing this for over 30 years. I've always focused on what will be the best investment properties. Now I'm focused on what would be the best homes. What are the most desired homes? It is a slightly different conversation, a different mindset. Of course, the two biggest challenges in the market in producing that stock is land and build contracts that are reliable, depending on how far out that land is, because build prices are changing so regularly and so rapidly. So they are challenges, but it is worth the effort. Land, mate, let's start with land. It's getting harder to find.
Yeah, it is. Local council LGAs are really understanding there's a real shortage of land in a whole range of different areas. They potentially forecast out, and they'd like to have between 10 and 15 years worth of land supply on their books, so to speak, before they have to think about rezoning. Many councils are getting caught, well, it's fine that you've got a residential block in the correct zone, but can it get serviced? A whole range of different things before you can build that block of land, and they're getting caught. No, we don't have 15 years worth of supply. We saw in southeast Queensland rezoning, I think, of close to 50,000 lots potentially, but that's a 10-year project. That's not solving the problem right now. And the swell, the push into areas that haven't been so strong are all of a sudden coming on really hard.
Yeah. Mate, we always had our finger on the pulse with land. It was a passion of ours, and we got a big focus on residential land particularly. We saw, obviously, the pullback when COVID came on. All the land developers pulled up stumps as quickly as possible, because none of us knew what the COVID landscape would look like. Then within about 3 months, and then with government grants and every other announcement, they quickly swung back the other way, particularly in those regional markets where they put the pedal down as quick as possible, trying to produce land as quick as possible to cater for that influx of people. But that's dug very deeply into that, land pipeline. And now we're seeing many postcodes around regional Queensland, New South Wales, even into Victoria. We're seeing those pipelines get exhausted. And a lot of people don't realise that to replace that and to bring forward projects, it does require massive infrastructure investment by councils, but the councils just aren't going to be able to supply that in those timeframes.
Well, they're busy too, right? So councils have their own agendas and the time they work to. I've heard some states talk about special task force put on to open up land, but that really hasn't happened. It's been more around, how can we bring on a shopping centre versus bring on residential land, which is disappointing. And then that's affecting affordability, really, because it's a supply and demand ratio.
Mate, it's a looming problem, I believe, because it's kind of like a priority list for the local councils. Everyone thinks of them as being, the government, but they're really just local government. And many of the people that we know and got close relationships with in those councils in different regions in up and down the East Coast particularly, they're overwhelmed. There's more building applications than they've ever seen before. There's more things going on, more population growth, more daily requirements just to service the people that are here now than they've ever seen before. And there's a shortage of qualified people because all the councils are growing, so everyone's stretched. It's not like they can reach out and look somewhere else up the coast or somewhere in another state, because many states are experiencing growth. How those, as the people flow out of the big cities. But the thing that we can see is a very big problem on the horizon, where they're not going to be able to catch up, and there's going to be a lag time of, I think you were kind of suggesting 7 to 12 years until they can get that big infrastructure, sewerage lines, and all of the infrastructure required for substantial land release.
No, when I'm talking to councils and they say, look, we'll have this strategy by the end of this month, it's not coming out that month. It might be another 3 months later. It's just everything's compounding as far as the workload going through councils, and so, mate, it's an interesting time.
Well, mate, it's interesting, and I think my approach of selling down a lot of my assets, pooling up my gunpowder, as I call it, trying to keep as much cash accessible to me, linking arms tighter than ever with you to try to go, how can we control more land? How can we get access to land in those growth corridors?
Which we've been doing.
Yeah.
And we're going to see the benefits of it now.
But we're seeing some horrific stuff as well. We're passing up on opportunities because we know, there could be some difficulties in bringing that land to market and actually making it work.
That's a good
other
point.
Companies are paying
that's
triple
a good
what we
point.
were offered it for.
Yeah, I am seeing that a lot. Typically a development site would be on a per lot basis, and what would you pay for the raw land? And I am seeing 3 times as much as it was 12 months ago.
Wait, we're looking at, what did we miss? Do we miss something there? And I still can't work out how they're going to make that work. But I think what they're thinking is that the what the consumer will pay for that lot and what the profit margin would be in producing the stock will still make it work out. Of course, it's there's a lot of confidence that this flow, this massive flow, millions of people flowing, freely with their wealth and population moving around the country. Some of these markets, some of these big regional hubs, it's a lot of confidence, a lot of backing from very big, deep pockets as to, where that flow of people are going to go and what they're going to need.
Well, mate, at the end of the day, you're selling some of your portfolio down. But you've done very well out of that portfolio as well. So it's like everybody's individual strategy. That's where you're at in this given time. But because you've had time in the market for many years and your portfolio, it is what it is, you've got the ability to sell and do very well.
And there is an opportunity cost to not doing it, because whilst I look at the stock that I've retained, 90% of it is stock that I think is going to continue to grow over the next 3 to 5 years in great places like Port Macquarie's and so forth. But what performance I think it will achieve over the next 3 to 5 years, comparing that to what I could do with those funds in the next 12 months, 2 years, and even using today's numbers, if the properties don't continue to grow, even if I could just produce the stock at today's numbers, there's a couple of $100,000 on average of profit margin in producing the stock and being able to supply that to the downsizers coming out. Now, out of Sydney, now to get a further $200,000 worth of growth out of each of those individual properties on average, you've got to think, well, maybe it could take, 5 to 10 years to get that growth. Not all markets are going to continue to grow. We know how it works, mate. You get a kick and then it tends to flatten out for a while, then it kicks again. I think they're good markets, but I think there's a bigger opportunity in building and supplying that stock for the downsizers, and and hopefully growing that gunpowder substantially.
Yeah, it's a great time for that, and the people that are ready and like yourself are able to move, they'll certainly capitalise.
Yeah, mate. Crazy times, but exciting times as well.
Yeah, it is. Well, it's a great time in our space.
Yeah, mate. I really can. It's very hard to find the negatives. I keep looking for the risk. I'm a very risk-averse investor. A lot of people would think the opposite, but the amount of research and the amount of time I take to take the risk out of my investing, and I find it really hard to to see anything but huge opportunities in those big key regional hubs, and particularly where we're targeting land right now.
Yeah, and we're still looking at some quality projects that, close to the CBD, close to the water, and very affordable for big parcels of dirt. It's, you can't not but win in those sort of scenarios.
Yeah. Mate, I think there's one last thing I'd like to touch on for the listeners before we close out this episode. I think there's two key strategies in the market. If you're going to invest at the moment, I think you'd either invest for cash flow, very cash flow positive properties. I think there's a great strategy in that.
Yep.
For a lot of investors, I wouldn't be buying a property with poor cash flow at this point in time. It should have a fantastic cash flow attached to it. And that could be the right strategy for investors that are just looking to reduce their mortgage over the next 10 years and offset some tax and, ride the market a bit further, but put their property to work very quickly. I think a strong cash flow property, at least 6% yield and above. I think that is a great strategy for a lot of investors. But I think there's the cash flow strategy, and then I think there's an instant equity strategy. And it's one of those two strategies. For me, cash flow, is kind of, not something I'm chasing at the moment. But I've got a real opportunity to create a lot of instant equity, and that's why I'm leaning much more heavily towards the instant equity side of things. But I think those two strategies are the best strategies in the market at the moment.
Yeah, no, I agree, mate. I agree, and that's not always there in the market. So you got to capitalise when you can.
That's a really good point, mate. It is an opportunistic approach. There is a bell curve that's going through the pipeline of time and population movement and so forth.
Yeah.
I don't think it will be there in 5 to 7 years. I think this is a very opportunistic approach.
Yeah, definitely over the next 5 years there's an opportunity there.
Yeah, good on you, mate.
Yeah.
Nice catching up.
Good on you, Phil.
Hopefully you got something out of that, listeners. We'll talk again real soon. Thanks for watching, guys. Don't forget to subscribe, and also feel free to leave me a question. I look forward to helping as many property investors as possible. Take care, and we'll talk soon.